Hi, Larry Gaines, Power Cycle Trading. Well, the markets were trying to find some support today, and you can see that the NASDAQ 100 came down, hit way down this 1272 extension, bounced, closed back up in the upper kind of quarter of its range, and then the same for the S&P, closed back above that 50. You can see the Russell's trying to hold this 200-day moving average, and then the Dow had a nice kind of close back up here in the upper quarter of its range, closed positive. So, we could see some more testing of this 200. So over the next day or two, keep a close eye on the Russell, that 200-day moving average. Keep a close eye here on the S&P and the NASDAQ right for this range. We need to get that NASDAQ back above this kind of 50. But one trade setup that we saw today that looks pretty interesting and can be very low risk type setup was a long trade setup for Lockheed Martin. Let's take a look. So you can see here Lockheed Martin has had a nice rebound back to the upside, but it's holding steady here right on that 8 EMA. So you can see it's had a nice move up, bounced up here, now starting to develop this kind of a bull flag. You can see here on the 30-minute squeeze just triggered here today, we've got a 60, 2-hour, and 4-hour squeeze. So potential for this to trigger and push further to the upside. So one really kind of lower risk defined trade setup was to do a call debit spread, very narrow spread width, and then can easily convert it, hedge it by turning it into what we call a broken wing call Condor. So let's take a look. Now you see here volatility squeeze here on the hourly. We've got cycle 1 and 2 above 0, so potential for that momentum to carry it further to the upside. So potential price targets would be here to 353, then up to potentially 355. So here's the trade setup, and here's an easy way that you could also then hedge, defend the trade if you needed to. So this trade setup is looking to buy the 352.5, 355 call debit spread. It was going out today at 105, 106, so buying it here for target up to this 353, 355. All right, so we get to 355, max profit being 145 at expiration, and max risk is your debit pay. Now, the other thing that you could do with this, if it starts to stall, or if you wanted to lock in a little bit more of a hedge, is you could go out and sell within the same series, the 360, 365 bear call credit spread, bringing in $60 credit, reducing down your debit spread cost. And then you've got what we call a call Condor, broken wing call Condor. Reduce your risk down to 45, have a nice potential profit zone in here of up to 205, and a nice risk profile. All right, so hope this helps in this kind of market. You want to be able to hedge quickly. So here's one trade idea that can do that.